Hey, everybody, welcome back to the show. Today, we are going to talk about what you can do with your 401k money once you actually retire. Sounds like a dumb question, but remember, there are no dumb questions, just dumb people. I'm kidding. Halfway kidding. Not really. Kind of kidding. All right, let's get into it. Let me set up the scene here a little bit. So, you have saved and saved and saved and saved. You've worked for 40 or 50 years, what seems like forever, and now you're ready to retire. And you've gotten used to this process of putting money into a 401k or even an IRA into a retirement account. But now the big day is coming. You're getting ready to either not work or you're going to switch to part time work, but your life is changing. And you're thinking, what in the world do I do with this money now? Does it just magically go into the fairyland of retirement and take care of me? Is it automatically transferred into some kind of account? Does the government take it and take care of me? This is a very normal, common question that we get. So I want to help walk you through the options that you have once you retire of what you can do with your 401k or IRA money. There are primarily three things that you can do with it. We're going to start with number one. Number one is that you can actually leave it in your 401k. This might seem crazy to people. Why in the world would I leave it in my 401k? But most people think that they are required to take money out of their 401k once they retire, and it's not true. When you become a certain age, you do have to start taking required minimum distributions, whole different topic for a different day, but you cannot be forced to take your money out of a 401k. And oftentimes someone will leave their money in the 401k at the place that they used to work because they don't know what they want to do with it next. That's completely okay. Maybe there's a transition timeline where they don't need the money yet. They don't want to open another account yet. They don't know what to do with it. So they leave it in the 401k for a period of time. They can leave it in there actually as long as they want. And then when the time comes, then they might take it out and do something different with it. So option one, you can leave it exactly where it's at. Don't let anybody tell you you have to take it out. That is not true. You don't have to take your money out of your 401k until the IRS starts getting their piece a little bit on down the line there. Choice number two is that you can actually take all of the money out of your 401k, have it deposited into your bank account in cash, and just take your money out. There are some things you need to know about this and why this is not usually the option that people choose or the one that we recommend. When money comes out of a 401k, and we're going to assume this is regular 401k money that is pre-tax, therefore taxes have not been paid on this money yet. When that money is taken out of the retirement account and put into your bank account, cash, check, anything non-retirement, that money then is taxed as income. The IRS has not gotten paid yet, and they are going to get paid. So they say, when you take this money out, you don't have to pay capital gains on it, but you do have to pay income tax on that money because it hasn't been paid yet. So if you take all of your money out in cash at one time, and let's say it's a bunch of money you've been saving for 40 or 50 years, you're going to owe income taxes on all of that money, and it's going to be calculated by the entire amount. For instance, let's say someone has $1 million. They don't have $1 million in income this year, but if they have $1 million and they take that money out in cash out of their 401k plan and put it into their bank account, they are going to owe taxes on $1 million of income. That is not a scenario that most people want to deal with. The goal is to pay your fair share of taxes, but to pay the minimum amount that is legal to the IRS over your lifetime. One of the ways that you can do that is to spread out the taxation of the money that you're taking out of your retirement accounts. So even though option number two is technically something available to you, you can take your money out. You can just put it in the mattress, put it in the bank account, do whatever you want to do. It's not usually advisable because of the taxation situation involved. And also because then you just have this lump sum of cash that you have to manage on your own, figure out how to pay yourself, figure out how to handle investments and things like that. And most people don't want anything to do with that. Because remember, retirement is paying yourself a salary, paying yourself a paycheck from the money that you have saved for the rest of your life and not running out of money. It's not as depressing as it sounds, but that's the reality, is that you are shifting from accumulating assets and saving money to distributing assets and paying yourself the money. And so you have to be very strategic with how you do that. So option number three is by far the most commonly used option, the one we recommend more often than not. And that is to take your 401k money and transfer it into what we call an IRA. An IRA is an individual retirement account. It is a retirement account that's specifically for you, for one person. So if you were in a 401k plan, you were in a plan that was built for a group of employees. It's a workplace retirement savings account. They are fantastic. When you get into retirement, you can open up what's called an IRA. You can actually open one up anytime you're an adult. But for the sake of this discussion, we're talking about once you retire. Once you retire, you open up this IRA, this individual retirement account. And what it does is a couple of different things. First, it allows your money to be invested specifically for you and your situation, your goals, your needs, your wants, your risk tolerance, your timelines, all of those things. It can be invested specifically for you. So one of the reasons that people want us to open up IRAs on their behalf is so that we can invest money on their behalf based on their goals and all of those other things that we just talked about. So that's one of the reasons you move it into an IRA. The other reason is that once you move it into an IRA, you can control how you pay yourself, how often, how much, and when and how you pay the taxes on that. So think about it this way. You spent your entire career getting paid on a certain schedule. Let's say you get a paycheck every 2 weeks, or you get a paycheck on the 1st and 30th of the month. And that is how you've set up your budget. It's how you set up your cash flow routine and your situation. It's just normal for you now. And you don't need to change that once you get into retirement. You can actually create what's called a distribution schedule of where every 2 weeks you get paid by your IRA. So what happens is we set it up, we connect it to your bank accounts, and automatically that money transfers from your IRA into your checking account or savings account, and you use it just like you would use any other paycheck. For most people, this creates a semblance of normalcy in terms of the way they have been used to doing things, paying bills, structuring their cash flow, things like that. You can do it however you want. It's your money, but it also lets you be very aware and strategic about how and when you pay the taxes to make sure that you're not paying more than you should and that you're in a tax advantage situation. Again, there's 3 things that you can do with your 401k money. You can, number 1, leave it in the 401k. You don't have to take it anywhere. Number 2, you can take it in cash. You just want to be careful with that because you're going to pay taxes on all of that money. Most people don't want to do that. And then number 3, the most common thing that people do with money from their 401k once they retire is to move it into an individual retirement account, an IRA, so that they can pay themselves, manage their tax situation, manage their investment situation, and structure their retirement payouts the way they want them structured. So if you have any questions about that, let us know. Again, there are no dumb questions, and this is one of those things that seems simple, but oftentimes is very confusing for people, and confusion breeds uncertainty, and uncertainty breeds fear. And we don't want you to be afraid. So if we can help in any way or you want to talk about any of these things, feel free to reach out. There's a million ways to get in touch with us. You can go to the website, ellisretirement.com. You can find me on LinkedIn. You can shoot us an email, call us, carrier pigeon, all the things. We're pretty easy to find, but we'd love to talk to you and help you out if you have any questions. I hope this was helpful, and we will talk to you next time.